David. Hello. Fab. I'm going to kick us off with a little introduction before I hand over to the lovely Emily. So, morning, if I haven't met you before, I'm Lindsay, Head of Programs at the FSI. And we're really excited to have this session today with Emily and Alan from PWW, who are lovely partners of FSI in various ways, who are going to be talking all things annual accounts and your charity commission reporting. So it's one of those topics that I can see we've got lots of treasurers here, we've got a few trustees, we've also got some staff members. We're going to have a good grounding of information today that will really help you out kind of getting started in that process. This is originally part of our small international development charities program, but we've opened it up a little bit wider because we had some queries from some of you that you felt it would be relevant to you. So welcome, even if you're not a small international development charity. But if you are, do check out the rest of the program because there's loads of stuff on offer for you for the rest of the year. We've got a couple more trainings coming up this side of the summer, and then we'll be launching the September onwards program soon. We've also got access to e-learning topics, which I think will be really relevant, especially if you're a trustee or maybe if you're new to the sector. Some of those Small Development Charities 101. We've got recordings of all of our previous trainings in this series. Again, all available for free. Just book through the LMS. So check out the website. There's a link there. You can also access anything on the FSI's core program for free during this year with a bursary code, which you'll find on the website. The other element of the program is a peer support match. I don't know if anyone's had a go at that before, but it's a really nice opportunity. Basically, we'll connect you with someone else who's also on the Small International program, who we feel you might have something in common with, maybe based on your role or your organization's size or location, just so you can connect and chat through the things you're facing. So I'm going to launch a little poll right now. Just if you want to hear more about that, I'll be connected with a peer match. I've just launched the poll. If you just click yes, it will basically record your name, and then my colleague Remy will put you onto our little sheet and match you up with someone. So you'll hear in a few weeks about a match. So just tick yes if you're up for it. Fab, I think everyone's voted. Thank you for that. Oh, no, one more person. Cool, thank you. So a little bit about today. We have 2 hours with Fab, Emily and Alan. Hopefully you've completed our pre-course survey that came through beforehand. You'll also get a post-course survey. Please do complete this out and give us your feedback. It's really helpful for us reporting back to FCDO who fund this program, and also for our learning and for PWW as well, to know what hit the mark and what we could do differently in future. We are in meeting format, as you can see. If you are able to stay on video, it's lovely to see your faces. If you're not, then feel free to switch it off if you've got internet troubles or whatever. We're going to be mostly chatting in the chat box, but I know Emily's got some opportunities to ask questions, and there's some polls and things like that as well. So do get involved throughout. We are recording the session so that other people can attend it and access the learning again in future. So just be aware that's what's come up for you. You'll be getting the slides. They should be available in your learner portal, which is where you booked the training from tomorrow, usually under my resources. So this is where you find that. You basically log into the website where you booked the training, and you head to my resources on that homepage, and you should find all the slides and worksheets for anything you've ever attended with us will be in there in one handy place. Couple of other housekeeping things. Yeah, you might have seen a notification for live streaming. Don't worry, we are not live streaming on Facebook or on the internet. That is just what it says. We've got Rev, which is a live captioning system. So if that is helpful for you to have live captions, you can turn those on and off yourself in the toolbar at the bottom of the screen. And the only final thing to say, we won't be having any formal breaks, I don't think, today, Emily, but if you need to take a stretch at any point, you're of course welcome to do that. And the only final point is to say, please do keep in touch with each other. So if at the end, or if now you want to connect on LinkedIn or email addresses, do, as you sign off, kind of drop your email, and you can keep in touch with other people you've met here today. Fab. So I think that's everything from me. I will now hand over to the Fab Emily from PWW, who's going to take you through the slides today. I'm going to stay in the background for a little bit. You've got our email at the FSI if you've got any questions, but otherwise have a lovely session. Thanks for coming.
Great, thanks, Lindsay. I'm just going to attempt to share my screen with everybody. Moment of truth. Hopefully you can all see that. If you can give me a thumbs up if you can, that'll put my mind at rest. Wonderful. Thanks very much. So thanks for that introduction, Lindsay, and good morning to everybody. Thank you for joining us for our webinar on annual accounts and Charity Commission reporting. My name is Emily Fellows. I'm here with my colleague, Alan Lester. We work at the firm PWW Solicitors, or Apothecary Witham Weld. We're based in Victoria. We're a small, friendly and approachable firm that offer a range of specialised legal services to charities, not-for-profits, individuals and families, as well as companies and partnerships. The firm is best known for its church and charities work and is widely regarded as one of the leading firms in that field in the UK. We have a real enthusiasm for providing assistance and help to small and medium-sized charities, such as yourselves, helping you to help the world. We're passionate about improving knowledge, understanding and good governance across the sector, and we're excited to be in partnership with the FSI to run webinars such as this one on annual accounts and reporting to the Charity Commission. Just a little bit more about who we are. I am one of our church and charity solicitors. I specialise in setting up new charities and converting existing charities into new legal structures, such as companies and CIOs. I also advise on trust reviews and on governance and other charity law matters. In addition to that role, I also act as a charity administrator for the Sylvia Wadilove Foundation, which is a grant-making charity based in the UK. So I've got lots of experience reviewing and analysing accounts and trustee annual reports, but from the donor perspective, which can be quite helpful. I'm here with my colleague, Alan Lester, who is an accountant who has recently joined our team. So recently, in fact, I don't have a picture of him to put on the slide, but you can see him there in the video. Alan's our new charity grants finance executive. He assists our charity clients in preparing their accounts and advises on the management of their financial controls. Alan's joining us today to answer any account-specific questions you might have, although we'll ask you to keep them fairly broad brush in any Q&A. If you've got a specific question, we're more than happy for you to get in touch with us via email after the session. We were due to be joined by our colleague Emma Portal, who is a trainee in our team, but unfortunately Emma's not feeling well today, so she won't be able to join us. Sadly for you, that means that you have my voice for the next 2 hours, and it won't be particularly well broken up. If after this webinar you feel that you'd like our assistance in either preparing your annual accounts or your trustee annual report, please get in touch with us. Likewise, if this has reminded you you have another burning charity law question that you need answered, or you need some advice on another area of law, please do get in touch with us. We'd be happy to help. Our contact details will be at the end of the presentation. In order to get the most out of today's session, it would be helpful if you can answer for yourselves these 2 questions. So what is your gross annual income for your charity, not yourself, obviously? And what is your charity structure? Are you a CIO, a charitable company, an unincorporated charity? If you can answer those questions, it will just help you get the most out of the rest of the webinar. One other housekeeping sort of matter before we get really stuck into it. The slides in this presentation are quite information heavy. I know, breaking the cardinal rule of PowerPoints, but this is because I know that you'll have access to this PowerPoint after the session, and I want you to have a resource at the end that you can look back to. In the months and years to come, you can refer back to this and get the information you need. So I hope that will be a valuable resource for you. We will also periodically be testing you on the matters covered in this presentation by launching poll questions. Please do get involved with those. They're a great way to check that you're actually absorbing some of what we're saying today. So what will we be covering today? We're going to start by looking at charity accounts. So types of accounts, whether they need to be independently examined or audited, when they need to be filed. We'll then pause for about 5 minutes for any specific accounts questions you might have, before hopefully going on a 10 to 15-minute tea break. When we come back, we'll look at the trustee annual reports, so the different types of reports you can file, what you need to include, as well as how to file them with the Commission. We'll then close the session by giving a brief introduction to annual returns, and what they are, when they're filed, how you go about doing that. So hopefully you find this session helpful. As I say, it's just me and Alan at the moment, so if you don't mind sort of holding your questions until the question and answer session, we'll hopefully be able to cover them there, rather than using the chat function. It's just a little unmanageable when there's so few of us. So let's get started. Charity accounts. Why is it important that you understand your charity's accounts? Charity trustees owe a variety of legal duties to their charity. These include acting in the best interest of your charity at all times and acting with due care and prudence. In order to discharge these duties, you will need to be well informed about the charity. Obviously, one very important aspect of understanding your charity is understanding its financial position. You need to have a strong grasp of your charity's financial position in order to allocate your resources, decide what charitable activities you're going to do, and decide whether you can afford new premises, make a grant, pay for employees. Understanding your financial position is particularly important where the charity is spending more money than it receives or has big debts. In these cases, trustees will need to consider the problem and then take action to remedy it. In extreme cases, this could involve closing the charity. In relation to corporate charity structures, so I'm talking about charitable companies and CIOs, the insolvency of the charity could involve personal liability for the trustees if they continue running a charity without being aware that it's become insolvent. So in summary, you need to understand your charity's accounts. Which charities must prepare accounts? So all charities, regardless of their size or whether they're registered with the Charity Commission, must prepare accounts. If these are not publicly available on the Commission's register, they must be available for the public to inspect on request. Some charities are legally obliged to submit their accounts to the Charity Commission. That is, all CIOs, regardless of their income, and charities with a gross income over £25,000. Once these are submitted to the Charity Commission, they are available for the public to view and download. Charitable companies are also regulated by Companies House as well as the Charity Commission. All charitable companies must submit their accounts to Companies House regardless of their size. There is also a legal requirement to retain accounting records. Generally speaking, the period for charities is 6 years from the end of your financial year. There are different rules for companies. The Companies Act 2006 sets the period at 3 years. However, if you're a charitable company, then it's prudent to just keep the record for 6 years, cover all your bases. So what type of accounts does your charity need to prepare? There are two types of charity accounts: receipt and payment and accrual accounts. The type of accounts that a charity must prepare depend on its structure and level of income. So receipt and payment accounts apply to CIOs and unincorporated charities with an income below £250,000. Accrual accounts, they apply to all charities, all charitable companies, regardless of their income, and charities with an income over £250,000. It is possible for a charity to choose to prepare accrual accounts, even if this isn't sort of required under law. This could be for a number of reasons. The charity may want more detailed accounts. Donors may require accrual accounts. as a condition of a donation or a grant, or it could be required under your charity's governing document. So do be aware of that last one. It can catch you out if you're not aware. So just to summarize that point, receipt and payment accounts are for charities with an income below £250,000. Accrual accounts are for all charitable companies and charities with an income over £250,000. You can choose to prepare accrual accounts, and there are a number of different reasons for that. So we're going to look at the two types of accounts now in a little bit more detail. Hopefully this slide's showing you which camp you're in. Receipt and payment accounts first. Receipt and payment accounts are a simple method of accounting. The accounts are made up of two parts. The first part looks at incoming and outgoing cash for the year, summarising donations and spending on charitable activities. The second part is a statement of assets and liabilities at the end of the year. There are no statutory templates that must be used, so style can vary. However, the Charity Commission have provided a template for these types of accounts, and there is a very difficult to see link on the slide, but you should be able to access that from the slides that FSI will share with you after the session. I have a picture on the next slide of receipt and payments accounts to show you an example of what they look like. There you can see they're quite straightforward. It's just those 2 pages there. And you should have a copy of that as well with the documents that you'll have access to after the presentation, so you can go back and compare it with today's slides. Turning now to accrual accounts. This is the other type of charity accounts. They're accrual accounts, or the accrual basis of accounting. And they are a more detailed standard of accounting compared to the receipt and payments accounts. All charitable companies and charities with an income over £250,000 must prepare accrual accounts. The accounts must comply with Charities SORP, FRS 102, and I will explain what that means a little later on. The Charities SORP requires that you prepare a statement of financial activities, which describe all of your sources of income and expenditure under specified headings, a balance sheet, which tells the reader what assets you have, such as cash you have at the bank, and what liabilities your charity has at year end. You also have explanatory notes. These are detailed notes breaking down particular lines of the accounts to show them in more detail, including things like employee costs and transfers between funds. Charities with an annual income over £500,000 must also show a statement of cash flow. Charitable companies will need to prepare accounts that meet some additional requirements under Part 15 of the Companies Act 2006. The Charity Commission have again provided a template set of accrual accounts, and again there is a difficult to see link on the slide. This shows all the additional information required in the notes section to the accounts, and can be very helpful if you're just setting out. To give you an idea of the difference between the two types of accounts, the accrual accounts template has 30 tabs on its spreadsheet, and the receipt and payments has 1. I have a picture of part of the accrual accounts on the next slide. And again, an example was sent to you, or will be sent to you with today's slides. I know it's very small, don't worry about seeing the detail, but here you just get an overview of what the accrual accounts look like. Hopefully you've seen something like this before. And here I've included the statement of financial activities and the balance sheet. The explanatory notes are on the next pages, and we're definitely not going to fit on my slide. SORP. What is SORP? So firstly, it stands for the Statement of Recommended Practice for Charities, and it provides guidance for charities on how to apply the financial reporting standard, that's IFRS 102, which is the UK-wide standard for preparing financial accounts. As an aside, you may find this interesting. These underwent a periodic review in March 2021, and a report's expected later this year. But any changes that are recommended won't come in until 2025. So something to be aware of, but not something that will have an immediate impact on you or your charities. SORP sets out the recommended accounting and reporting standards for charities using the accrual method of accounting. So they apply to accrual accounts rather than receipt and payment accounts. Additionally, it provides instructions in relation to trustees' annual reports, which will accompany your accounts. And we'll look at that in a lot more detail later on in this webinar. The guidance has been issued by the Charity Commission in England and Wales, along with the regulators for charities in both Scotland and Northern Ireland. The Charity Commission have issued 2 updates since its inception. Sorry, that was hard to say. One in February 2016 and one in October 2018. There was a consultation in 2019 which recommended making reporting obligations easier for smaller charities, and the SORP making body, which oversees charity SORPs, has said that it plans to release a consultation on a new charity SORP in 2023. So that's something to be aware of, and particularly if you're a smaller charity, you may want to get involved in that consultation when it's launched. So that was a lot of information very quickly, and I'm sorry about that, but we have our first poll question now, and I will attempt to make that work. It's failing at the moment. Polls, there we go, sorry. Right, so I'm going to launch our first poll. You can see the question on the slide there. The first question is, which type of accounts does a CIO with an income of £250,000 need to prepare? You'll have 2 options, vote A for receipts and payments and B for accruals. I'm going to launch it now. Please join in. Right, anyone else to vote? Another minute. Right, okay, so everybody I think went for the accrual basis. This is slightly a judgment call. I think you're all correct to go for the accruals basis. A CIO with an income of £250,000 can prepare receipt and payment accounts, but obviously if that income ticks up by even just £1, then they will need to use the accrual method. So given that it's right on the threshold, would definitely be recommending they prepare accrual accounts just in case your income tips over the threshold. So well done for answering that question. We're going to look now at independent examination and audit, and comparing the 2 and working out which one your charity needs to be undertaking. So by law, charities may be required to have their accounts scrutinised by an independent third party. This will either be an independent examiner or an auditor. This requirement applies to about 64,000 charities in the UK. It's an important part of the system of charity regulation in the UK. It assures those interested in the charity's work of the accuracy of probity of the charity's financial position. Whether you need an independent examination or an audit depends on the charity's income level. So charities will require an independent examination if their income is between £25,000 and £250,000, or if their income is between £250,000 and £1 million, they will still require an independent examination, but that examiner must belong to a specified professional body. So if your income is between £25,000 and £1 million, you're looking at an independent examination. If your income is between £250,000 and £1 million, then that independent examiner has to be a member of a professional body. And we'll look at what that means a bit later. Charities will need an audit if they have an income over £1 million or an income over £250,000 if you have gross assets over 3.26 million, which is a very specific example that I think probably won't apply to anyone in this webinar, but it's worth bearing in mind just in case you fall into that camp. It's also possible for charities to choose to have an audit. This is something that charities can do periodically. I've known charity clients that where the trustees have decided to have an audit done every, I don't know, 5 years, 10 years to make sure that their financial controls are up to scratch, really, and to check that everything is functioning the way it should be. It's also possible that your governing document requires you to obtain an audit. Again, double check that, don't fall foul of that requirement. So we've looked at whether you need an independent examination or an audit. Now we're going to look a little bit more at the difference between the two. So what's the difference? Well, an independent examiner will look at the accounts and check that they add up and agree with the underlying records. It's often referred to as providing a negative assurance, i.e. they confirm that there's nothing of concern here. An audit is a much more vigorous examination. As well as doing what the independent examiner would do, they will additionally verify the underlying records, check and test financial systems, and follow money all the way through the organisation. This requires a positive statement that the accounts give a fair and true view. In large charities, this can take weeks or months to complete. The cost is also quite different, as you can imagine. To give an example, one of our charity clients opted for an audit last year, and this cost them around £3,500 plus VAT. The independent examination this year is only costing just over £2,000 plus VAT. Obviously, costs vary depending on who's doing the examination and who's doing the audit, as well as the charity's activities and income. But you can see that an audit is a significant investment and something to bear in mind, particularly if you're choosing to have an audit. So who can be an independent examiner? Section 145 of the Charities Act 2011 defines an independent examiner as an independent person who is reasonably believed by the trustees to have the requisite ability and practical experience to carry out a competent examination of the accounts. So the key point here is that it doesn't need to be an auditor. It doesn't even need to be an accountant. It could be a bank manager or a retired financial assistant, someone with knowledge and experience of financial accounting. The test is simply that the trustees reasonably believe the person is competent to provide that examination. They must also be independent of the charity, so they shouldn't be a major donor or have any commercial relationship with the charity or the charity's trustees. I mentioned previously that where the gross income of the charity is over £250,000, the Charities Act requires that an independent examiner is a member of a professional body. These are listed in the Act, and they include a member of the Institute of Chartered Accountants in England and Wales, the Association of Chartered Certified Accountants, and the Association of Authorised Public Accountants. So as you saw on the previous slide, if you're falling into that category of a charity that has an income between £250,000 and £1 million, your independent examiner needs to be a member of one of these bodies in order to do that independent examination. That's just something to be aware of if you fall within that category. Moving on to look at auditors now. This is much easier to define. A statutory audit must be carried out by a registered auditor. That is someone who's a qualified chartered accountant and a member of a professional body, the same ones that were listed just on the previous slide. Top tip time now. Our top tip is to make sure that you use somebody to prepare or scrutinize your accounts that is properly qualified. Now, by that we don't just mean that they've got the necessary finance qualifications or experience, but more that they understand how these financial rules apply specifically to charities, because a charity is a very different body to a profit-making company, and you need to make sure that the person that is advising you understands those differences. In 2019, the Charity Commission carried out an investigation into the work of independent examiners and auditors and found that they had significant failings. This was primarily because they didn't understand the charities that they were working for. Charities with incomes between £250 and £1 million, well, 51% of the accounts submitted had failed to meet the Charity Commission's expected standard. So it's really important that you have confidence in your financial experts, and particularly that they understand how to produce accounts for your charity rather than simply for a profit-making company. We're going to look now just at who needs to file accounts. So all charitable incorporated organisations, CIOs, must file their accounts with the Charity Commission. That's regardless of what their income is. Charities with an income over £25,000 will need to file their accounts with the Charity Commission. Charities with an income below £25,000 simply need to prepare their accounts. They don't need to file them with the Commission. Your accounts must be filed within 10 months of your financial year end. For charitable companies, and I know that we've got a number joining the webinar today, you're regulated by both the Charity Commission and Companies House, and you will need to submit your accounts to Companies House as well as the Commission, and Companies House must receive your accounts within 9 months of your financial year end. So another top tip, I don't have a slide for it, but when you're submitting your Companies House accounts 9 months afterwards, submit your Charity Commission ones as well. Save yourself the stress of trying to work out those dual deadlines. Late filing. It happens to us all. But what happens if you don't file your accounts on time? So the Charity Commission do not issue fines. This is a policy decision of theirs. They don't believe that it's a good use of publicly donated funds to pay fines, but they do still take a robust approach to late filing. Late filing of accounts are noted on your public register, which is not a good sign to supporters and donors. It can damage the reputation of your charity. If you are late for filing for 2 years in a 5-year period, the Charity Commission will put you into a different risk category, which will mean that they will pay closer attention to what your charity is getting up to. It could lead to an investigation, and that could lead to a finding that trustees have breached their duties, potentially mismanaged the charity, and could lead to disqualification. I think it's worth pointing out that this more applies to those that are filing late, not because they've somehow missed the deadline or their internet was down for the day they had to file it on, but more as indicative of more serious issues within the charity's governance. And that's particularly what the Commission are looking out for. But it is always best to file your accounts on time for that reputational boost, and also to keep the charity commission off of your back. Late filing with Companies House is a different story. Companies House have a strict administrative fine for late filing, which applies to all companies, including charitable companies. No discounts for charities here, I'm afraid. These fees are doubled if the companies failed to file on time in the previous financial year, as well as this year. In addition, it's a criminal offence for directors of charitable companies to fail to file their accounts, and they could face large personal fines up to £5,000, including disqualification or even prison. Again, this is where accounts are suggesting underlying issues for a charitable company. Charitable companies can also be removed from the company's register, and obviously then are no longer existing. So be very sure that you are filing your accounts with Companies House in particular on time, because it can lead to very serious consequences for the charity. Right. Again, that was a lot of information, so I'm going to test to see how well you've been listening with another poll question. So true or false one this time. A charitable trust with gross income of £500,000 needs to have its accounts audited because they are prepared on the accrual basis. A lot of key statements in there. See if you can have a go at answering this question. Great, I'll just give you a few more seconds if you're still having a think about your answer, and then I shall reveal all. We're 50-50 at the moment, so. Right, okay. That was a 50-50 split. I'll share the results with you. There you go. A 50-50 split there. So the answer is false. So a charitable trust would need to prepare accounts on the accrual basis because their income is over £250,000. However, they would only need to be audited if their income was over £1 million, or if they had assets of 3.26 million, which admittedly you don't know from the question. So hopefully that has provided you with a lot more information about charity accounts. We're going to pause now for maybe 5 minutes of questions, particularly on the accounts, and I'm gonna let Alan join in to answer some of those questions. So if you have a question, please either put it in the chat or raise your hand, and we'll look to answer that. After these questions, we'll look to have maybe a 10 or 15 minute break, just so we can all stretch our legs and get a cup of tea. I'm going to stop sharing my slides for now, and I'll come back to them later. Right, there's a question in the chat from Adrian. If you have an income of over £250,000 this year, but under that for the year you're filing, can you proceed on the 250k rule? Alan, did you want to jump in on this one, or otherwise I can take it?
It's a very good question, isn't it? I think I don't know the answer to that. Sorry, I failed at the first hurdle here.
So I think that you can proceed on the under 200 if your income for the year with which you're filing is under the threshold, then apply that rule. If you're looking at having a larger income for the next financial year and you've already started preparing your accounts for that one, it's whichever's easiest for you. Basically, you can choose to prepare the accrual accounts if you've already started looking into that and preparing that for the next year, and you want to kind of get one under your belt. Absolutely, you can do that. If you're more comfortable with preparing those receipt and payments accounts, then that's fine. Did that answer your question, Adrian?
Good question.
Sorry, Adrian, I couldn't quite hear you there. Could you speak up? Does anybody else have any other questions about the accounts? Or any comments for that matter, if you've got things that you've struggled with or things that you've learned along the way that you'd like to share with others, then please feel free. No. Oh, the slides must have been detailed enough. They've answered all your questions. Okay, well, that's no problem. And if something occurs to you a bit later on in the webinar and you want to come back to it, that's absolutely fine. We can do that. Or if you'd like to sort of message us privately, if you don't want to share it with the group, that's fine. Or if you think it's part of a bigger question, you'd like to email us afterwards, that's fine too. So I'm looking at the time. I've got, call it 11:15. Shall we come back and rejoin at 11:05, and we can look at trustees' annual reports after that break. Great, I will see you back here at 11:05.
Emily.
You're right, Alan.
Hi. That's an interesting question. All the references seem to be during the year. So the judgment seems to be on what your income thresholds are in any particular reporting period. You don't look beyond that. Although there'd be an interesting scenario where if you were close to the 250,000 threshold on the receipts and payments basis, and you suddenly found you'd become entitled to receive a very substantial bequest or something. Now, under the accrual system, you'd have to bring that into your accounts because you became entitled to it, even if it wasn't paid to you during the reporting year, which would take you over that threshold. I don't know how you do with that. Because you have to prepare your accounts in accordance with the SORT, which would require you to do that.
So would your advice be sort of, if you're close to that threshold, to really be looking at doing the accruals accounts anyway, just to be on the safe side?
Yeah, I think so. Definitely. Yeah. Yeah.
Well, thank you. That's really helpful, Alan. I think, yeah.
But I think if you're just doing a simple yardstick test on how you prepare your accounts, you're just looking at a year in question. I mean, another question would be what happens if you go in and out of an audit requirement, because you'd have to report your auditors would have to make it clear that they didn't audit the comparative figures because there wasn't an audit requirement in that time, but they're reporting on the current year's figures.
Sure.
I mean, a few little grey areas around the edge, aren't there?
No, absolutely. Hi, Nigel. Did you have a question?
Hi, yeah, sorry about that. I kind of missed the beginning part of that. I guess it was related a little bit to Adrian's question.
Yeah.
Because that was because Adrian and I work in we're trustees of the same organization, and we kind of the last year we just dipped above by I think maybe 10, 20,000 because of donations that came in over the 250 threshold. And then we've gone back down again. So we paid grants and then we've gone back down again. So I think Adrian's question was very much about sort of at the end of the financial year, we're kind of below the threshold, but we went above the threshold during the year. And we're sort of, so we're bubbling on that sort of threshold. And I take it from what Alan's just said, that which is kind of my understanding, is that we would need to do accruals accounts because we went above the threshold for at least, even if it's for a day during that financial year. Is that correct? Is that what I picked up? And I'm sorry, I missed the beginning of what you were saying.
No, not at all.
I think you're looking at the totality of the reporting period and whatever falls out from that. It's not a question of a kind of rolling average of your income. You just look at you'd have your draft accounts available and then you make a decision based on that, I guess. Although it doesn't make it totally clear looking at the guidance. That's the way I would read that.
So my understanding as well is that it's gross income.
Yeah, that was the other point. Yes, it's not profit or surplus. I think it would be quite a difficult one to argue with the Charity Commission that, the limits are there and you haven't complied with them. So I keep on the side of the angels there, I think.
So I think our advice is sort of, if you are kind of in and around that threshold, it may be worth your while preparing those accrual accounts just to be on the safe side. You may find that helpful to you as well. Obviously, they cover a lot more detail than the receipt and payments accounts.
The overarching requirement is to show a true and fair view of the activities of the charity in any period. I would argue that a receipts and payment can't possibly do that. However, whatever level of income. So I think a well-run charity would probably opt to do that. The additional discipline of doing accrual accounts, really.
That's great. Thanks very much for that. We're going to look now at the trustees' annual report, which is the next sort of big chunk of our session today, and it really follows on from the annual accounts. Your trustees' annual report is usually the document that's at the front of your accounts, and it's what puts your accounts in their kind of charitable context. So we'll look at that now. Please do, if you've got more questions on the accounts or something of what we've been discussing has sparked something else off, do make a note of it, and we'll look at that, and any other questions, any questions in the chat and things at the end of the session. So moving on to look at trustees' annual reports now. So we'll look at what a report is, who should file one, and what you should be putting in it. So what is a trustees' annual report? A trustees' annual report is a report, an external report that trustees of all charities registered in England and Wales must prepare annually to accompany their charities' accounts. It is an opportunity for you to provide the wider picture, a wider picture than just the accounts. Whilst a trustee's annual report is required to have certain disclosures and sections, and that's something we'll look at in more detail, it's designed to complement your accounts by putting that data into its financial context. The trustee's annual report is usually found at the front of your accounts, as I've said, and it's normally filed as one document. It provides a chance for you to really sing your charity's praises, to explain any challenges you faced, and any real, really noteworthy things that you've achieved in the year. Your trustee's annual report is a way to enable your charity to tell the story of the public benefit that it is providing and the good that it's doing in society. It is the responsibility of the charity trustees to prepare a trustee's annual report, though I will acknowledge that that task is often delegated to somebody else within the organisation. The responsibility for preparing one remains with the trustees. I've got here on the slide, it is not a chair's report. It's not an internal report. summarising what's happened in the year. And you should bear in mind that it is a public document and a window really into your charity. So you want to be putting your best foot forward in your trustees annual report. So again, we have two types of trustees annual report: a smaller charity report, which the Charity Commission often term a simple report, and a bigger charity or a full report. Templates for both of these are available on the Charity Commission website, and there is another very difficult to see link on the slide, which you should be able to access from the slides that you receive after the session. The clue is in the name for these reports. A bigger charity report follows the SORP guidelines, which we mentioned earlier, and because of this, it's suitable for charities producing accrual accounts rather than the receipt and payment accounts, because it follows the SORP guidelines as well. The smaller charity report contains broadly similar sections and information to the bigger charity report, but it's just a lot simpler. Both reports need to state how your charity's carried out its purpose for the public benefit. So, which charities should use which reports? CIOs we'll look at first. So small CIOs with an income below £250,000 who are using the receipt and payments accounting method, they can prepare a smaller charity report to sit with those accounts. Bigger CIOs with an income over £250,000 who are using the accruals method of accounting should use the bigger charity report. As we mentioned earlier, CIOs that choose to use the accruals method should also be preparing bigger charity report. Think accruals equals bigger charity report, basically. So companies next. All companies must prepare a bigger charity report, regardless of their income level. Again, all companies must prepare accrual accounts. The two sit together. For unincorporated charities, small unincorporated charities with an income below £250,000 can prepare a smaller charities report, whilst those with an income over £250,000 must prepare a bigger charities report. Again, if you've chosen to use the accruals accounting method, you should be preparing that bigger charities report. Preparing versus filing. All charities must prepare a trustee's annual report as a requirement under the Charities Act 2011. All CIOs and charitable companies need to file their trustees annual report, regardless of income, with the Charity Commission, and charitable companies also need to file their report with Companies House. If you're not a CIO and you're not a charitable company, then you are by and large an unincorporated charity. And unincorporated charities with an income below £25,000 don't need to file their trustees annual report. So very small charities, but they do still need to prepare a report. They don't need to file it, but they must prepare it, not only because it's a requirement under the Charities Act, but because the Commission and donors can request a copy. So it's good to have one to hand. It's also worth pointing out here, I think, that you can file your trustees annual report separately to your accounts and annual return, but it is best practice to file your accounts, trustees report and annual return all at the same time. That way you're not missing out on a deadline, you're not forgetting about one, or means that one becomes overdue. We recommend you file all three at the same time, but if you're in a pinch, you can file them separately. Another poll question. So this question is, who needs to file a trustees annual report? And more than one answer may apply. So please select A, a CIO with income below £10,000, B, unincorporated charities with an income below £10,000, unincorporated charities with an income between £10,000 and £25,000, CIOs with incomes over £100,000, and companies limited by guarantee with incomes over £25,000. Please let me have your answers. Whenever you're ready. Just give you a little bit more time. Right, I think that's pretty much everyone has answered. I will end the poll now. And I will share the results, I think. The results, hopefully, you are seeing on your screen are there. This is what people voted for. The correct answers are A, D, and E. So CIOs and companies must file regardless of their income. So that's A and D. And E is also a company, so they must also file their accounts. B and C don't need to file. I've been saying accounts. Forgive me, I meant report. So CIOs and companies must file their reports regardless of their income. B and C don't need to file their reports with the Charity Commission because their income is below £25,000. There you have it. Stop sharing that poll. So we'll look now at the typical content of a trustee's annual report. The first thing that I want to say is just don't get too stuck on the layout, which section goes where in your trustee's annual report. It doesn't matter. The important bit is making sure that you have covered all of the required sections and the disclosures. It would also be far too lengthy and boring for me to go through both templates of a trustee's annual report. So we're going to look at the bigger charity report because the smaller charity report is just a simpler version of this. You should have access to an example of a smaller charity report in the Safety When It Matters trustee's annual report and accounts, which you should have along with these slides after the session. Just if you're interested to see a smaller charity report, you can kind of see how it's similar to what we cover now and see how it's different. You will also be sent or have access to the Brunswick Healthy Living Centre's trustees annual accounts report and accounts along with these slides, and that is an example of a bigger charity report, and what we're going to go through now sort of follows that. It follows their layout, so it should be nice and easy for you to see the different bits we're talking about after the session. So I'm going to start with the directors and strategic reports. Now, this only really applies to charitable companies. I don't intend to cover this in any great detail. Suffice to say that under company law, charitable companies must prepare a director's report and a strategic report, put my teeth in, depending on the company size. A well-drafted trustees annual report is capable of being accepted as a director's report without the need to prepare two different documents. So that's just something to bear in mind. If you're a charitable company, your trustees annual report should tick both boxes for you. This next section, objectives and activities. This is the exciting bit of drafting your trustees annual report. It is the section where you go into detail about how your charity has achieved its purposes for the public benefit. The idea is to help the reader understand how the charity has fulfilled its purposes in the preceding year. So if you're a small charity, you only need to state what your charitable objectives are, and you can find those in your governing document. Just copy them word for word, and the actions you took to achieve these. So what activities did you do? What projects did you run? Put that detail into your trustees' annual report. If you're a bigger charity, then you will also need to explain your strategy for meeting your objectives. So your longer term aims and how those will fulfill your charitable objectives. You need to outline any significant activities you undertook and link them back to your strategy. The main projects you ran during the reporting period, link them back to your strategy. Give details of what your charity achieved, so the impact in meeting its objectives. You'll also need to explain how you measure the success of your projects and other activities in meeting your charitable objectives. So, is it the number of people that turned up? Is it the number of people that you helped? Is it a successful operation? Obviously, that's very charity dependent, but explain the impact that you've had. For example, if you're a grant making charity, what grants did you issue? If you have volunteers, what did they do? What was their impact? How did they enable you to meet your charitable objectives? It's important here in this section to explain the activities and projects you identify in your accounts. So this is your opportunity to really put your accounts in their context. This will show any reader, including potential donors, how you spend your money for the public good. And it will also highlight if you've got a really big expenditure in your accounts. Well, I can see what project you spent it on. Yes, that looks worthwhile, or it can raise flags for potential donors. So this is your opportunity to really explain those figures in your trustee annual report. Another thing to kind of top tip, remember to check that the figures you quote in your report match the figures in your accounts. I mean, it sounds really obvious, but it can be really easy to let a typo slip in there, and it can raise a really big red flag for people that are reviewing your report and accounts. So make sure they match. And the next thing I have on the slide there is the public benefit disclosure. This is an important declaration that the trustees have complied with their legal duty to have regard to the Charity Commission guidance on public benefit. And you can see there, that's a sentence that I've taken directly out of the report that we've shared with you as an example. It's that simple. It's just a sentence saying the trustees have considered the Charity Commission guidance. You can often find this disclosure tucked away into other sections of the trustees annual report. Doesn't matter. As long as you've got that in there somewhere, happy days. Achievements and performance is the next kind of big section of your report. And this is obviously closely linked to your objectives and activities section. Here you summarize the main achievements of your charity and its impact on your beneficiaries and society as a whole. It's also a really good opportunity in this section to explain some of the challenges that you faced, and particularly to provide an explanation if your accounts or your activities could be seen as worse than last year, or perhaps a lot better than last year. It's a good chance for you to explain sort of any changes that have happened over the financial year or compared to the previous year. I mean, for example, COVID-19 will have had a significant impact on your charity, maybe increasing demand, maybe limiting activities, impacting on staffing. And I'm sure that that is still having an impact on your charity. It might be reflected in bigger or smaller expenditure in your accounts. And this is the section in which you can really explain why that's happened. Explain the challenges that you faced. Let the public, let the commission, let any potential donor see why your accounts are the way they are. Some other challenges you may have faced, things like losing a key member of staff, getting a new CEO, did you get a generous legacy, did you relocate? All these things that will have had a massive impact on your charity can and should be explained in this section. The more you say here, the better idea people get of your charity. The financial review This section sort of summarizes the key financial risks and uncertainties that your charity faces, as well as your plans for the future. So any big ticket items you've got coming up, any pension liabilities, a statement of your charity's reserves policy. I will linger on this point because this is often a question that comes up. Your reserves policy is different depending on your charity's needs. Every charity is different and every reserves policy is different. It depends on how much your trustees feel they need to have on hand in order to see them through unforeseen circumstances. It is something that's important to explain in your report because it can help to explain why you haven't spent certain funds. So you may appear to a donor to be quite cash rich, but if I can see that you've got a reserves policy, oh, I can see why you haven't spent that. Fine, that makes sense. Or equally, it can be reassuring that sort of says to a potential donor, look, we've got this set of reserves that we can rely on to make sure that we can fulfill this project. So it's a really helpful thing to explain in your financial review section. You should also explain any details of any funds that are in deficit and any plans you have to rectify that, disclosure of a going concern, as well as a really brief summary of your charity's finances. As I say, this document's usually stuck right at the front of your accounts, so you don't need to go into really any detail, just pick out the key figures, income, expenditure, that kind of thing. They'll be explained more in your accounts. It's just there to give a taste in the report. You should also include details of any restricted or designated funds that you hold. So that's funds that can only be spent on a particular purpose. Again, that helps to explain to potential donors why you're seeking funding when you might otherwise appear to be really cash rich. Structure, governance, and management is the next section that you have to have in your trustees' annual report. This section should include information on the nature of your charity's governing document. So is it a trust deed? Do you have articles of association? Do you have a charity commission scheme, etc., etc.? How your charity is constituted. So are you a company, a CIO, an unincorporated association? You also should include the methods you use to recruit trustees, including any requirements in your governing document about appointments. This is particularly important if you have an external body which appoints trustees, or if you have trustees who are, the technical term is ex officio. You may have heard of that. So for example, if you've got like a church school, sometimes a governor can be an ex officio governor if they're also the vicar of the local church, that kind of thing. Sometimes if you're closely linked to another organization, you can have an ex officio trustee who's sort of a trustee by default of another position that they hold. And you'll want to mention that in your structure, governance, and management section. Administrative details, I've put here, they're often at the start of your trustees' annual report. In this one, they were at the end. You can decide where to put them in the middle if you like. But you will need to include just some really administrative bits, really. So your charity's name, any working names you have, its address, your registration number, your company's house number if you're a charitable company, the names of your charity trustees during the period of the report. This is something to watch out for, particularly if you've had a resignation or an appointment during that financial year. That list won't necessarily just be who are the trustees when you're writing the report. So do be aware of that if you've had any change of trustees in the financial year. You should also include the names and addresses of any of your charity's advisors. So any lawyers that are instructed for the charity, any accountants firms, that sort of thing. And the names of any of your senior staff, particularly those with delegated responsibilities, so managers, team leaders, that sort of thing. The last section I haven't put down on the slide, because it's actually quite rare, it's custodian trusteeship disclosure. So if your charity or its trustees are acting as custodian trustees, that is holding property on behalf of someone else, then you just need to disclose that there, that you're holding that property on behalf of another organisation or a sister charity, something like that. So that was a whistle-stop tour of the requirements for a trustee's annual report. Hopefully that's helpful. Hopefully the slides will be helpful for you to look back on when you leave the webinar. So you've written your report. What happens next? So the report needs to be approved by the trustee board. It needs to be dated and signed by an authorised person, and your board minutes should reflect that. The report will also need to be filed with the Charity Commission, depending on your income thresholds, of course, as we've discussed earlier. And you should file it really along with the accounts when you submit your annual return. So do all three of the documents we've been talking about today at the same time. It will save you a lot of stress and worry if you do that. A charitable company will also need to file their trustees' annual report with their accounts at Companies House. And there are separate deadlines for that we've discussed. And some charities may need to file with another regulator, such as the Department of Education. You will probably know about that if that's applicable to you. Top tips. My top tips for a trustees' annual report are to really take your time with it. Draft your trustees' annual report. Don't make it an afterthought, something you panic and do at the end. It shouldn't be viewed simply as a Charity Commission requirement, but an opportunity for you to promote your charity, to really sing its praises, to list all the activities that you've been up to the public and to potential donors, as well as the regulator. The next point is, it is really obvious when charities use exactly the same document each year and just change the dates or the names. It can look like you're not very passionate about the charity that you're working for. So do bear that in mind. It does come across to potential donors and the public. Yeah, and again, the funders, donors, the wider public will look at that document for the detail of what you're about. So make sure that you're really singing your charity's praises. Time for another poll question. Trustees' annual report needs to be signed before it's filed with the Charity Commission. Is that true or false? And I will launch it now. Right, I think we're there with that one. Anybody else? It's probably counting me as well that way. I'm not voting on my own poll. I'll end the poll there. Thank you very much, and share those results with you. So the vast majority of you said true. Some of you said false. This is a little bit of a trick question. Sorry, the answer is false. The report does need to be signed by the trustees, but you can file it with the Commission without that signature. So it is best practice, absolutely, to file the report once it's signed, just in case you forget to get it signed. But if you're in a real pinch and you're up against the deadline, you can file an unsigned copy. Just bear in mind that the Charity Commission and donors may ask to see a signed copy later on. So, sorry, that was a bit cheeky, really. Nigel, yeah, did you have a question?
Yeah, that was cheeky, actually. Just a couple of very quick questions, if that's all right. You reference professional advisors in our organisation. I mean, it's all volunteers. I think as a matter of practice, we would want to include our sort of volunteer advisors. But I just wanted to know the sort of the definition of a professional advisor and whether we would run into any problems if we included our bank of volunteer advisors. And the second question was, an authorised person, I presume, is a trustee and not an external. So, for example, the chair and the treasurer, or one of the trustees, and it's not an external authorised person. And this is a sort of a trustee's annual report linked to an accruals account.
Yeah. So yes, absolutely. An authorised person would be, I mean, usually it's just a trustee that signs it. It is possible for the trustees to sort of designate, I don't know, if you've got a secretary or a kind of clerk to the trustee board, or a kind of somebody who's on the operations side for whom it's just easier for them to sign it. They can authorize them to sign on their behalf. That is possible. So that's what that authorized person means there. Your initial question about sorry, remind me again what your
volunteer advisor.
Volunteer advisors, thank you very much. So volunteer advisors, yeah, I mean, usually the commission are, I think, here thinking of particularly your paid advisors, if you have them. I think as a belt and braces approach, list them, particularly if you're relying on their expertise, even if they're volunteers. You may want to double check or have them double check if they're you know, if you have a lawyer who volunteers with you, that they're happy for their firm's address to go in there. They may need to check with their own firm before it goes in, that they're happy with that. But I think explaining that that's the sort of professional advice that you're relying on, and that it's on a volunteer basis, just explaining that in your report is really good. That's great. Was there a third question you had in there, Nigel? No?
No, that was it. Thank you very much. That's very clear.
No problem. Were there any other questions just before we move on to the annual return? I'm going to take that as a no. Okay, you will all be pleased to know that this is the last section of the webinar. So we're going to look quickly at the annual return. So firstly, who, what, and when. I couldn't come up with a how particularly that fitted on the slide. So what, when, and who. So what is an annual return? So an annual return is information which charities provide every year to their regulator, i.e. the Charity Commission, or regulators, particularly if you're a company, you're also providing that information to Companies House. And you're just providing them with information to keep them up to date with information about your organisation. It's an opportunity to update the regulator and the public about your status as a charity. The annual report promotes transparency, accountability, and good governance within the third sector. When do I need to complete an annual return? Essentially, it's once a year, every year, for as long as your organisation is a charity. You must file it with the Commission no later than 10 months from your financial year end. So again, that matches with your accounts deadline, and no later than 9 months if you're filing with Companies House. Again, that matches with their accounts deadline. And finally, who needs to file an annual return? This is a recurring theme. Ultimate responsibility for filing the return rests with the Board of Trustees. The task can be delegated, and often is, but the responsibility remains with the board, and it remains with the whole board. It doesn't rest on one particular trustee. So on this next slide, I have an example annual return. This is the PDF copy of the online return which you submit to the Charity Commission. As you can see, this one is slightly out of date. That's 2019, but the majority of these questions are exactly the same, as you will encounter in this year's annual return. What will I be asked? This is one of the most common questions we're asked when explaining the annual returns process to clients. And unfortunately for me, the answer is not straightforward. The questions you're asked really depend on a whole host of different factors, including your income level, your constitution, whether you operate overseas, if you receive income from overseas, if you submitted serious incident reports, and just generally on the activities of your charity. What I will point out at this point is it's an online form, and the Charity Commission really sort of walk you through it. So depending on your answer to the previous question, you'll be asked another question. CIOs will always have to file an annual return regardless of their income level. For other types of charity, the higher your income level, the more questions you're going to be asked. The two key thresholds really are £10,000 and £25,000. So if your income is over £10,000, you don't, or over £10,000, you have to submit an annual return. If it's under that, you don't have to. And we'll look at those in a bit more detail in a minute. So what information do you have to provide, and that's applicable to all charities? So some questions apply to all charities. So you'll be asked to confirm the name of the charity's contact details, that the trustee details are all up to date. That's something that you need to really check before you start the return. I got caught out a couple of years ago when the Charity Commission suddenly wanted trustees' phone numbers and email addresses, and it wouldn't let me submit the return until those were updated. So just be aware that your trustee details need to all be up to date before you can complete the return, because you are confirming that that's all up to date in the return itself. You also need to confirm your charitable purposes and that those haven't changed. A little bit of information about your activities, your geographical area of operation, and your income figures. So if your income is over £10,000, which I think is everybody on this webinar, you will be asked for the start and end date of your financial year, as well as your income and expenditure during that period. Some additional questions on the source of funding will be asked probably as well as some additional questions on trustee payments, staff salaries and benefits. You don't need to upload your accounts to the Commission unless your income is over £25,000. So if you're in that bracket between 10,000 and 25,000, you're just answering those questions there really, and it's a very brief return. If your income is over £25,000, then you will be asked, in addition, to upload your accounts as a PDF, remembering, of course, that they may be independently examined or audited. And you'll be asked some additional questions, such as whether you've made any serious incident reports or not during the period. I think a number of the charities represented on this webinar are international charities that work overseas. So we're going to just look at a little bit of detail about the work that, some of the questions that are really specific to international charities. So if you receive income from overseas, you will be asked to specify which countries you receive income from, and then break down the income you've received from each country, which can be quite time consuming. So do bear that in mind. You'll also need to specify the source of income, which will fall into one of 6 categories. So there you're on the screen, you've got overseas government or quasi-government bodies, overseas charities, NGOs or NPOs, other overseas institutions, individuals that are resident overseas, or unknown. Those are your 6 categories, and it can be quite tricky trying to work out which category your income falls into, but just give it your best shot really, I think is all the advice I can give on that at this point. If you carry out operations overseas, in particular if you're spending money overseas, you'll need to again specify which countries you're operating in, and break down your expenditure for each country. You will also need to explain to the Commission what transfer method you're using in order to spend that money. So if you're using regulated banking system, so your traditional banking system, then the questions sort of stop there. If you are using alternatives, and I've listed some on the screen there, I'm not going to read them out to you now, but if you're using any of those alternatives, the Commission will ask you to confirm to break that down as well, to break down what expenditure is being spent in each of those alternative systems. So do be aware that you will have to explain that transfer method to the Commission. And that's a risk-based thing for them. So the Commission will also be asking you to confirm that you've got sufficient policies and controls in place to monitor the risk and expenditure in those countries, and that the trustees have reviewed those in the year. What I will do at this point is, and this is something I meant to have put on a slide and forgot to, the Charity Commission do publish every year a spreadsheet with a list of all of the questions that they will ask, or they could possibly ask in the annual return. As I say, they don't apply. You won't necessarily be asked all of those questions. Some of them don't apply to your charity, but it's a good starting point to work out what information you need to have to hand in order to fill out that form. So I'm going to put it in the chat now before I forget. And then you should all have access to it. I mean, you can, of course, find it just by Googling it, but I'll put that link there just in case that's helpful to somebody. As I say, the return really walks you through all the different questions, so you don't need to know which questions are applicable. The software will work that out for you, but it does help to know which information you need to have to hand beforehand. So how do you make the return? So the annual return for the Charity Commission is filed online. There's no alternative to that, and that is a free service. Companies House also require an annual return. They call this a confirmation statement, or a CSO1 form, and you can complete that online for a fee of £13, or you can complete it via post for a fee of £40. See which one Companies House prefers there. I'm just going to go through some top tips now regarding the annual returns. I think this is really the only kind of advice I can give you in filling them out. That once you've done one, they're really quite straightforward. It's just that first one that can be quite daunting. So your annual returns should follow on from finalising your accounts. So don't leave your accounts to the last minute. You've got to leave time to get your return done as well. It does help to have your accounts to hand. A lot of the information that the Commission will ask you is present in your account, so you can use that to answer those questions. Don't assume your income figure will be the same or similar to last year, because you can tip into a higher band, and the questions can obviously shift because of that. You will need to know your login details beforehand. I believe that it is your charity registration number and then your password, which you should have been sent by the Commission. So, I mean, you can do the whole kind of I've forgotten my password thing, but just make sure that you've got those login details to hand, particularly if you're going up against the deadline. Finally, give yourself time. Allow at least an hour to get this return done. Hopefully it will take you less time, and the more of them you do, the quicker you get, but do give yourself enough time to complete it. The Charity Commission use a flag system to identify non-compliance. No or late filing of annual returns can indicate underlying poor governance issues, and can cause the Commission to take a closer look at your charity possibly even an investigation if they think something serious is going on. So do stay on the regulator's good side and file your return online on time. Know when your year end is and set yourself some reminders for it. The Commission do send out reminders, but I would not rely on the Commission to send things out on time if I were you, and I would set your own reminders. Remember, of course, that the register is your window to the world, and potential funders and donors and the public will see if you filed late. So make sure it's showing you at your best. So what happens if you do miss the filing deadline or you can't file your annual return? Again, the Charity Commission do not issue fines. Again, they don't feel that this is an appropriate use of public funds, but they do flag any late filing of annual returns and accounts, which can damage your charity's reputation. Repeated late filing or no filing can result in an investigation by the Commission, potentially a compliance visit, and ultimately, if they are unhappy with what they find, removal from the register. It's worth noting as well that late filing can also mean that the Commission will not grant approval to anything else you're applying for. So if you're applying to change your charity's name, for example, or notifying them of that, they may press hold on that until you filed your return and use that to force you to make sure those returns are on time. So if you've got any big changes you've got coming up, make sure that you're up to date with all your filing, because that can hold you up. Finally, the Commission do have the power to require a charity to rectify its submissions if something is inaccurate, and they have the power to produce records, to require charities to produce records and answer any questions posed. Sanctions can include disqualification of trustees, and in extreme cases, prosecution, none of which is good for the reputation of your charities. So do make sure you're filing your return on time. Right, I think that this is the final poll question. You may be pleased to know. So this question is, what is the deadline for filing your annual return with the Charity Commission? On the anniversary of being registered, on the last day of your financial year, 9 months after your year end, or 10 months after your year end, or at the beginning of your new financial year. Remember, we're talking about the Charity Commission here. And I will launch that poll now. Great, I think that's most of you. I will end the poll and share those results with you. The correct answer is D, 10 months after your year end. C applies to Companies House annual returns. So do bear that in mind. Another thing that came up in a question that was asked by one member here is, if you are newly registered with the Charity Commission, there is, I think it's a period of 12 months in which you don't have to file your accounts or your annual return. They give you a kind of 12 months grace period, if you will, where you don't need to file that return. So if you're in that category and you've either just been converted to a CIO or you're just a newly formed charity, do bear that in mind. You do have that grace period of about 12 months before you have to start getting into that pattern of filing all these documents. Right, 2 final slides on this section before we come to our question and answers section. I'm just going to whiz through these quite quickly, really. This is just dealing with the Companies House confirmation statements, which is another name for the annual return that you submit to Companies House. You need to confirm really all the following details. So the full name of the company, its company number, its registered address, confirm details of your directors, the type of company you are. So usually that will be a company limited by guarantee, your principal business activities, and obviously there is that £13 online filing fee. This form's often completed separately to your accounts. They're not sort of sandwiched together, in contrast to the Charity Commission annual return, when you file your accounts usually at the end of that. No or late filing at Companies House. Companies that fail to file their annual return on time can face a fine, and repeated failures can lead to a company being struck off the register. Criminal sanctions can be imposed to enforce good governance, and directors can be disqualified for a repeated infraction. So again, make sure you're filing with the charity, with Companies House. That is the end of my talking bit, which I'm sure you're all very delighted about. You should have learnt about the different types of charity accounts, whether they need to be independently examined or audited, and when they need to be filed. You should also have learned about what information you need to include in your trustee's annual report, and when and how to file that. And your annual return, you should know what it is, when it's done, and how it's done. So thank you very much for listening. I'm going to stop sharing my screen now so that I can see you all a bit better. And if there are any questions, if you want to raise a hand, I think some were being asked in the chat, so I'll take a quick look at those. But yeah, over to you if you've got any questions. Right, so I see that Adrian asks, do we have to register our year-end date with the Charity Commission? And yes, you do. That's one of the questions that's asked in your annual return. They will ask you to confirm that your financial year start and end dates. That's something that is usually that stays the same, obviously, unless you've recently changed it. That's how they ask that question typically. Does anybody else have any questions that they want to raise either through the chat or to raise a hand now in the Zoom meeting? Or any comments you might have? Yes, Nigel.
Hi, sorry, it's just really to say thank you very much. I thought it was incredibly helpful, as we're sort of fairly new charity and new to having to move into the world of accrual accounts. But I thought that was incredibly clear and helpful. Thank you very much indeed,
Well, great.
to everyone for delivering this. Thank you.
No, you're very welcome. I'm glad it helps. No, I think that's really helpful. Hopefully the slides will be a resource for all of you going forwards. If that was a kind of information overload for you, you can look back and check all those details later on. If you've messaged me privately in the chat, I will try and respond to your query as soon as I can. do remember that if you do have any sort of further questions, if you think you might like our assistance in helping you prepare your annual accounts or your trustees annual report, do get in touch with us. Likewise, if you've suddenly thought of a charity law matter or a governance question that you have that you'd like advice on, do get in touch with us. Otherwise, do make a note of our details, and I will share them on the screen now. Just if you need any help in the future, you know where we are. We'd be more than happy to give you any help going forwards. Otherwise, thank you so much for listening. I'm sorry that you had to listen to quite so much of my voice in this session, but it's been a pleasure to have you. If you want to stay on and ask any more questions, you're welcome to. We've got another 10 minutes of the session. If you'd like to go and get on with your day, that's fine too. It's been a pleasure meeting you. As I say, if you've messaged me privately, I'll try and get back to you in the chat.
Thank you so much, Emily and Alan. It's been really great, very informative training. So thank you. Have a great day.
Thanks very much. You too.
Yeah, bye. Bye.
Yes, please. Good luck with your work.
Thank you.
Emily, am I not on mute? You hear me?
I can hear you, yeah.
I had a couple, there were 3 other headings that I'd made a note about for inclusion in the TAR, and I don't know whether or not they are